There is a lot of interest linked to Forex trading. Some people are scared to try it. It might seem difficult or overwhelming for some to get into. It is wise to be cautious when spending your hard-earned dollars. Stay current with the latest information. Here are some tips to help you in doing just that. Forex is ultimately dependent on world economy more than other markets. Before you begin trading with Forex, you will need to understand certain terminology such as interest rates, current account deficits, and interest rates, trade imbalances, and current account deficits. Trading without understanding these vital factors will result in heavy financial losses. Forex trading requires keeping a science that depends more on your intelligence and judgment than your emotions and feelings. This can help lower your risks and prevent you from making poor emotional decisions. You need to make rational when it comes to making trade decisions. Other emotions to control include panic and panic. The use of Forex robots is not such a good idea. There may be a huge profit involved for the sellers, but none for a buyer. Do not trade on a market that is rarely talked about. Thin markets are those that lack much public eyes. Don't think that you can create uncharted Forex success. Forex trading is an immensely complex enterprise, and financial experts that study it all year long. The odds of anyone finding a new successful strategy are pretty slim. Do your research and find a strategy that works. You need to keep a cool head when you are trading with Forex. You could end up not thinking rationally and lose a lot of money. You should never follow blindly any advice about succeeding in the Forex market. Some information will work better for some traders than others. If you use the wrong methods, even if others have found success with it, you will need to develop a sense for when technical signals and reposition yourself accordingly. It can be tempting to allow complete automation of the trading, for you find some measure of success with the software. This is dangerous and can result in big losses. Beginners should completely avoid trading against market trends. They will most likely be unsuccessful and experience a lot of unneeded stress. It can be tempting to allow complete automation of the trading process once you find some measure of success with the software. Doing so can be risky and lead to major losses. Forex is a trading platform dealing with exchanging, in which traders make money by buying and selling foreign currency. This practice can bring in extra money or possibly even become a full-time job. You will need to know exactly how to proceed in order to start buying and practice them before you begin Forex trading. Most experienced Forex traders recommend maintaining a journal of everything that you do. Keep a track of wins and losses. This will let you keep a log of what works and continue using strategies that have worked in the past. Learn how to accurately read and graph. Taking data from different sources and combining it into account all of the information involved in Forex trading is the skill that sets the good traders above the bad. You can look up information on Forex trading online. You will be prepared to trade when you understand how the market is doing. If the reading confuses you, try joining a forum or taking to pros to learn what you need clarification on. Treat your stop point as being set in stone. Set a stopping point prior to starting to trade, no matter what happens. Moving a stop point makes you have let yourself trade on your emotions instead of your strategy. Moving a stop point is the first step to losing money. It is inadvisable to trade currency pairs that do not have high liquidity. You may have a harder time finding buyers for the more obscure currency pair. Don't trade against trends when you are just getting started. It is generally a good idea to stay away from picking highs and lows in line with the market as well. You will see a real increase in your anxiety when trying to trade against the trends. Trade to your strengths and be aware of what they are. Take it slow and then start slow. Research the purpose of a market advisor expert does and how one could be useful to you. An expert advisor will help you follow the market while you are doing other things. If you happen to find yourself in a losing pattern, don't let your desire override limits set when you were in a more logical mindset. Give yourself time off to get your head back in the game. You may have decided you are suited to Forex trading. You must understand how Forex works before you go for it. Understand how currency markets move and what causes them to move. You should accumulate knowledge about the various currencies are trading. The more you educate yourself, the more likely you will be to select currencies that will be worth more in the future. You need to use different types of analysis while trading on the Forex market. You can use fundamental, or sentimental analysis. You will reduce your results if you do not using all sources. As your Forex experience increases, you will be able to apply all these different types of analysis to your trading. Before you start Forex trading, there are a number of things to think about. It is understandable that some people may find this a little daunting in the beginning. No matter what level of experience your trading is at, make sure to use the advice given to you here. Make sure you always remain up to date with your education and current information. Don't squander your money. Invest wisely.